More bank collapses are on the way. In today's video, I'm going to tell you which banks that you need to be aware of or which you need to avoid. If you have money in these banks, I would withdraw it. If you have savings there, if you own stocks in these banks, I would, again, very carefully consider this. And what's amazing to me is that the two banks that have just had these massive hits, warnings, are the exact two that I warned you about last year. They are on my list of 10 banks. These two have been hit really hard. And let's give a bit of context here. And also, you're probably going, oh, Neil's back in the studio. I've just got back 20 minutes ago, and I said, you know what? I wasn't going to stream, but this story is so big that I need to stream it. So quickly threw on a shirt and blazer, and here we go. So context then. We talked about this a couple of days or a few days ago here, how the Wall Street Bank is scrambling to contain the fallout from this private credit implosion. And it's huge. We covered all this. If you didn't see it, it's $12 billion bankruptcy case, and it sent these massive tremors. Now, what did I say? I said, ladies and gents, this has now started. And, you know, the usual people in the comments, oh, no, it hasn't. This is just one thing. Clickbait, fear-mongering, all this sort of, you know, the usual stuff. And I've just written my newsletter as I was traveling home, actually. So that'll be out in an hour. And it's quite, I think it'll be quite interesting for those of you who read my newsletter every Friday. If you don't, the link is below. It's free. You don't have to pay for it. But one of the things I was writing a story in there today, and it was really around, and again, it's a very old story, but let me bring it into modern days. Imagine you have a dam, right? And the dam holds back a lot of water. And below the dam are villages. Now, what happens if you take a hammer or a sledgehammer and you go to the dam and you hit it? Probably nothing's going to happen. One man, one hammer is not really going to do a lot. It's going to send a shockwave through the dam, but it's not going to break it. It's not going to burst. Well, what if that man goes there every day with his sledgehammer and he hits it in either the same place, different places every day? Again, it's not going to burst the dam. But when you have events like this over and over and over again, and you start to see these sort of these surface level cracks, you know there's something deeper going on underneath. And you start to see a lot of these cracks forming. It's only a matter of time until, and again, this is what people don't understand about the finance world. That's why they're so critical often in the comments. They think it's sort of like a, you know, it's like this. It goes like this. Oh, one thing, the next thing. It doesn't. You have all these things that sort of occur, and then all in one go, bang, you have this massive contagion. The man takes the sledgehammer, he hits that same spot again, and the dam just bursts, and the whole thing just explodes, and the water floods the villages below. And that is exactly what happens with the financial world. That's what happened with '08. It's what happened with 2000. You go back to the 70s and 80s. It's the same thing over and over again. And that is what we are at the start of right now. We're at the start of this, and not even the start. This really happened in 2008 was the start, and they've been sort of patching up the dam as we have gone along. But this is a huge bankruptcy that's taken place, and I want to give you the context for what has happened overnight as well. So if you haven't seen this already, what were the two banks I warned you about last year? Zions and Western Alliance. What a coincidence that these have just been hit really, really hard. Incredibly hard. And the warning I gave you then is the same one I'll give you now. Any bank like these two that have huge liabilities in commercial real estate, get out of those. Not financial advice, I have to always say that. Get out of those banks, because you've been seeing this wave going through the commercial real estate markets. And it's only a matter of time. It's a race to the bottom right now with commercial real estate. And this is without a crash, right? This is without a market crash. So it's only a matter of time until these hit. So I'll tell you the 10 banks very shortly. Now, let me just give you a couple of points from this big story then that's broken overnight. Shares of two regional US banks tumbled overnight on Thursday this was, after the companies said they were victims of fraud on loans. Oh, that's quite convenient there. After they invested in distressed commercial mortgages. Well, why are you doing that in the first place? Again, does it make sense? Because they make a lot of money, that's why. So Zions sank 12% after they disclosed a $50 million charge-off for a loan. California Bank and Trust in San Diego, and also Western Alliance tumbled 11% after it said it made loans to the same borrowers. The disclosures add to other recent loan blowups, including Tricolor Holdings, which filed for bankruptcy. It triggered a near total wipeout on the debt. And then there was the auto parts. There's JP Morgan & Co., Fifth Third Bank as well. They've all disclosed hundreds of millions of dollars in combined losses here. Now, let me just say one thing. JP Morgan is not going to be affected. If you're holding JP Morgan shares, if you're got money in the bank, etc., that's not going to, you don't need to worry, okay? And the reason why is because that is a pebble on a beach for them. It's such a small amount of money. It truly is. But for some of these smaller banks, 50 million, 100 million, into the billions, that is a big deal. And it's going to hit the share price hard, and it can cause a ripple effect. It's a contagion. And this is what we're seeing right now. The Western Alliance also lent money to the same investors group for them to buy mortgage loans. And this is almost $100 million. This is the loan that they think they might default on. Now, what actually happened was, and this is so stupid. It's absolutely staggering to me that the collateral that they had with a lot, and this is what the shadow banking sector does, by the way. It happened in 2008. They never followed up on this collateral in years. They never checked that who they loaned the money to was actually doing what they were supposed to do. So they're supposed to have this collateral. What they did was they transferred those assets out. They were meant to have a certain amount of money in the accounts, in the millions. They transferred that money out. It said the account had $1,000 in it when they checked. Well, this is absurd, and this is the problem sometimes with the banking industry. They're not doing the checks. They're just trusting these entities to do the right, honourable thing. It's madness. So I think, anyway, let me just come to a point on this. I think there's going to be some really, really big drops at some point. And again, I haven't got a crystal ball. People always say, oh, you can't predict it. Oh, this sort of stuff. No, I can't predict it. Neither can Warren Buffett. Warren Buffett can't predict it either. Most of the top investors can't predict when these things will happen. We just know the patterns we see from what we've studied in history, and having studied all of these cycles going back a very long way. I've only gone back to around the late 1800s with these cycles. Some people have gone back even further. It's the same patterns that we are seeing. So I think there's going to be some shockwaves. I'll say it now. I think there's going to be some shockwaves in the markets. But at the same time, that means you can prepare now, and you can sort of seize that opportunity. Whenever you see these sort of market declines, there's massive opportunities. A lot of you are in the private community. You see me posting some of this stuff, stocks, stock picks and things, significantly undervalued stocks I'm seeing already. And I think this is going to continue, and I'll continue to post those, so you can actually, when you see these hit quite hard, you can load up on them, dollar cost average in, etc. And if you haven't taken my stock market course, by the way, I know it's very expensive, and that's why I put it on sale occasionally, but I would highly, highly recommend looking at it, at least looking at the information page. In fact, I will load it up here so you can have a quick look. I'll leave the link below in the description. I'll give you a massive discount on it today, anyone that wants to do this. And you actually read the testimonials. People have said this is the most advanced stock market course they have ever taken. There's people even in big hedge funds and stuff that they've bought this for their people and all sorts. It's a really, really good course. But anyway, the link's below in the description if you want to check it out. Now, this is starting to spread. Look, UK stock market hit by nerves over US banks. This was the UK stock market today. It has fallen because of this warning on the sell-off. And again, this is what I mean about the contagion. So because of these two banks selling off their shares, the UK stock market fell today. It fell quite significantly. Barclays was hit. Standard Chartered was hit, some more than 5%. The FTSE 100 was hit. But it was also Germany's DAX. It was, France was hit. Asia was hit. We're starting to see this contagion now. And this is all because of these two banks. But it's not just that. JP Morgan has also, or Jamie Dimon, should I say, of JP Morgan, he's actually come out and said that where you see one, you'll see more. The cockroaches are starting to come out. Investors have started to question why there have been a plethora of issues in such a short space of time, and whether this points to poor risk management and loose lending standards. Investors are being spooked all around the world. They are having knee-jerk reactions, and they're looking for safe haven assets. And that's exactly what we are seeing. In fact, let me share some of the charts here. Look at this, European bank stocks, Barclays, Deutsche Bank, Standard Chartered, NatWest. Now, I'm not saying they're not going to bounce back and recover. I haven't even checked them since a few hours ago. I'm sure some of them will get bought back up, right? But the point is, you don't look at the price on it. Look at what's taking place. Look at the volatility. This shouldn't be happening if everything is rock solid. Jamie Dimon, he also made a further statement. He said, these two failures could be a sign of more to come. He said, my antenna has gone up, and there's probably going to be more. Everyone should be forewarned on this one. And you look at what's happened also with the gold price. You look at, and again, I mentioned about crypto, so you can't say, especially in a newsletter, I wrote a full thing on crypto last week for you, or was it the week before? And I said, look at this, look at the charts, look what's happening, and look at the volatility. So not financial advice. I said, just look at your positions. I've exited mine. I'm out now for this bull market. I'll be buying again next year in the bear. I'll be loading up quite heavy. Took very good gains. I'm very, very happy with it. Right? That's why you should get the free newsletter every Friday, 8 p.m. UK time. It's free, link below. But you got to look at what's happening. The gold, look at gold, it's exploding. Look at silver, it is exploding. Look at the safe haven assets. People are rushing. It tells you something is, and again, I'm not telling you to get out the stock market. I'm not. I'm just saying, look at your positions and make sure you're diversified and protected. Don't take big risks at this point in the market. Even the VIX index was today at its highest level since April. Now, there were some banks I wanted to tell you about. Okay, here we go. These are and again, this was about 3 hours, 2 to 3 hours work, so it isn't complete, but this was just some of the research that I did based on the credit, CRE, and fraud risks. I basically took 3 variables here. So number 1, Western Alliance, WAL is your ticker. Number 2 is Zion. Again, Zion Bank Corporation. These were the 2 I warned you about before, and these are the 2 that have been hit. So again, it's just charting, it's looking at history, it's not, I don't have a crystal ball here, that's how I realized that. Number 3 is Fifth Third Bank Corp, FITB is your ticker. Number 4, New York Community Bank Corp, NYCB. Valley National Bank Corp, M&T Bank, MTB. FNB Corporation, FNB. Old National Bank Corp. Number 9, First Merchants. And number 10 is Bank OZK, or ZK for the Americans. This was formerly the Bank of the Ozarks. So if you have any exposure to those ones, I would say definitely, I know it's a Friday, so some of you are in the UK are like, I can't call my broker right now. That's why you have online platforms and you manage some of this yourself. But if you're in the US and you have some exposure to those 10, I would speak to your broker today and just ask them, hey, am I in this? Have I got any risk here? What do you think? Can you move me into a safer asset? I'm not comfortable with this. That's what I would be looking at right now. Well, I'm back anyway here in the studio for a few days, so you'll get at least one video from me next week, and then I will be heading off to the other side of the world for the winter, as per every year. Same thing. So definitely check out the stock market program. Going to be some big opportunities coming up, but also it will teach you how to find what I find for the Patreon every month: undervalued stocks. Finding these ones I think are going to do really well for the long haul. They're just the ones that you add to your portfolio, small portions, just add them to your portfolio, hold them, and then 12-18 months they typically pop off. It takes about that sort of time with some of my picks for you. And you don't look at them in the meantime, because they will go like this. And sometimes people message me, Neil, that stock, it dropped by 3%. I had one there about 5 or 6 days. It dropped by 3%. And like, yeah, I wouldn't be surprised if it drops by 10 to 15%. This is what happens. But you just got to hold them for the long haul. That's what investing is all about. Diversification with really good picks. So you can learn how to do really good picks in the program. So thank you for being online. Thanks for being a subscriber. Take care. God bless you. God bless your family. I'll see you on the next one.